back. You're watching Investors Guide on ET Now. Dhirendra Kumar is with us in our Delhi studio. It's time for our product review this week. We're looking at the HDFC Premier Multi-Cap Fund. We'll find out if it's the best in its category and if you should stay invested. But first, Avan is here to give us an introduction to that fund. Avan.
The HDFC Premier Multi-Cap Fund was launched in 2005, and as its name suggests, it invests in a diverse portfolio of large and mid-cap premier or blue-chip companies. While this exposure limits the fund to fundamentally sound companies, it also caps the fund's potential during the mid-cap rally. The fund did not have a dream start and has lagged behind its peers in the beginning of its career. Over a 5-year period, the fund has clocked in an annualized return of 4.5%, missing the category average by 1%. The fund's track record of participation in rallies has been disappointing. It lagged behind most of its peers in 2006 and 2007. The fund's worst performance, though, was in the year 2008, when it gave negative returns of 58%. In the recovery of 2009, the fund delivered 90% returns in line with its category. HDFC Premier Multi-Cap has lost about 10% over the last 1 year, while its category only lost 1%. So is it time to give up hope and look for better options? Let's find out.
Dhirendra, the HDFC Premier Multi-Cap Fund in the last year has lost more than its category and more than the Sensex. If you pull up those numbers, it has a 10% fall over the last year. That's compared to 1% from the category average and about 0.5% on the Sensex. It hasn't really been impressive. Even over the last 2 years, it's lost more than the category average. It's really not doing much to hold up the HDFC name right now. What's your expectation from this fund going forward?
This fund's mandate is very clear that it is supposed to be in the mid and large cap, but blue chips, proven company. And it has never behaved like a great fund. It is so well settled in its mediocrity when we look at the universe of multi-cap funds that it's not a disappointing fund. But it's not a great fund. In some, alternate years or, 3 of the 7 years it has been in existence, it has beaten the benchmark. Sometimes it has beaten the benchmark by a wide margin. Sometimes it has underperformed by a wide margin. Net, it turns out to be a fairly average fund. So I would say don't expect anything beyond mediocrity. And now, it has proven its mediocrity over the past 7 years.
Well, if you look at the category, there's also HDFC equity within that same category that has done remarkably well in comparison to this fund. Would you recommend that investors of this fund start pulling their money out and looking for better options?
Yes, I think it may not be a bad idea. And, it's a HDFC equity is a proven fund, has a, far superior credential. So I would say if your money is invested in this fund, you can confidently move your money from here to there.
Recommendation that you move your money out of the HDFC Premier Multi-Cap Fund into HDFC Equity. Dhirendra, finally, your rating of the HDFC Premier Multi-Cap Fund?
As on the risk-adjusted scale, and and I call it a mediocre fund. Also, I would give it a 3-star.
3 stars there for the HDFC Premier Multi-Cap Fund. Let's move on. We have time for one more question. K. Sindhuja has written in. Now, he tells us he began investing in the Tata PE fund about 18 months ago. And then he ran out of money, so he couldn't continue that SIP. And he tells us the fund has given him negative returns. He's lost his capital. He wants to know, should he hold on to that fund, or is it time for him to book some loss and maybe consider a different option?
No, during this time period, if you would have invested in any equity fund, it would not have been, it would have been a little disappointing. It would have been more disappointing. But I think Tata PE ratio fund is an excellent fund. And the mandate is very simple. The fund invests in relatively cheap stocks, and of course those stocks would have become cheaper, but I don't think they're lousy stocks. I think it's a great portfolio, and past 2-3 years I don't think any equity fund would have pleased you, however diligently you would have been doing your SIP. So don't give up. If it's your long-term money, carry on. Maybe start your SIP, continue your SIP in Tata PE ratio fund with belief and conviction, and nothing will happen till the markets turn around. So feel happy that you're buying cheap. If you don't follow that approach, if you keep looking at the return, how much has your money turned into, you'll keep getting anxious, keep asking us, should I run?
So remember, if you are nervous about the way your fund is performing, it's important for you to remember that when the market is down, all equity funds will be down. But you can also compare your fund to other funds within its category. So large cap to large cap, mid cap to mid cap, multi cap to multi cap. Find out how your fund is performing in comparison to its peers, and that will give you an idea of whether or not your fund is doing well and if it's still a good fund. And like Dhirendra said, if it still makes you nervous to have lost that much capital, maybe equity is too risky for you. Dhirendra, thank you so much for answering those questions on this show. We look forward to having you back soon. If you have questions for Dhirendra, write into us on the email ID that's flashing on your screen right now. After the break, we'll find out which is the best online term cover in the market. Don't go anywhere.